Hi everyone, I'm Chad Shoup, and thanks for tuning into my video today. I'm going to be talking about recency bias and how that psychological effect is playing a part on my expectations for the fourth quarter this year. And then before I jump into my video though, I just want to give you a chance to subscribe to my channel. You can scroll below, click subscribe so that way you don't miss out on any of my weekly insights. And if you have a comment, you can leave me a line below. Look, I'm going to be talking about the fourth quarter and a psychological effect that I see taking place. So if I'm able to change your mind on the upcoming fourth quarter, if you have your own thoughts on what you expect the stock market to do in the fourth quarter of this year, just leave me a comment below and let me know your thoughts and I'll be sure to chime in. So in my video today, I'm going to be talking about recency bias, which is a psychological effect where investors are basically taking the most recent information and expecting that to take place again, instead of looking at the long-term trends that we've seen in the stock market or in this particular stock. So today, we're focusing on the fourth quarter of the year. And I know that a lot of investors have this recency bias on their mind because at our Total Wealth Symposium on Amelia Island back in September, and I hope you were there, and I hope I got to meet you. We had a great time, so if you missed out, be sure to join us next year. But while I was there, I got to interact with many of our readers who attended the meeting, and a lot of people were telling me they were worried about the fourth quarter. And I understand their fears because when you look back to last year, last September, at our last Total Wealth Symposium, everybody was excited. Everybody was eager to invest and to continue to benefit from this bull market that just seemed like it can only go higher. And then the fourth quarter of last year, as you may recall, was one of the worst quarters since the Great Recession, and it was the worst December of 2018 was the worst one that we have seen in nearly 50 years. So this was a very rough quarter for the stock market, and it's really having a lasting impact on investors and how they invest in this fourth quarter. And I know a lot of people were telling me that they're going to wait until after the fourth quarter, wait until January. They just didn't want to go through the same experience they did last year, this time around. And that, my friends, is recency bias because they're looking at this quarter and expecting that the troubles that we had last quarter are really going to show up again this quarter, and that's keeping them out of the market. But when you look at the long-term trend, and I'm talking about, we can go back to 1950 and look at this trend, and it shows up even over a 10-year period, but we'll go back to 1950, so almost 70 years of data. And when you look at the trends on a monthly basis for the S&P 500, you see that the fourth quarter is actually one of the strongest quarters of the entire year. Yes, October is volatile, but it's still a historically positive month. And then when you look at November, December, January, those are the three strongest months of returns for the entire year. Then February takes a little step back. Then March and April are also two strong positive months. So you have 5 of the strongest months in the S&P 500 that are going to come up over the next 6 months. So this is why this time period is known as the best 6 months of the stock market. And it's that notion that you really want to ditch the idea of recency bias, because this time period for stocks, the next few months and all the way through April, is the strongest time period to be invested. So you don't want to be nervous and to sit out on the market today. Instead, you want to be invested. And one place that you can invest to beat the market and to benefit from the rally that we typically see over the coming months is the iShares NASDAQ Biotech ETF, ticker symbol IBB. Now, this is an ETF comprised of some of the major biotech stocks in the market, and it has a strong seasonal trend that I track in my premium service, Automatic Profits Alert, that goes from now through April. So we have plenty of time to benefit over these next few months, over this best 6 months time period. And you can use this ETF as an easy way to capture those returns. But of course, in my premium service, we jump into not a broad ETF, but we find the best stock that's going to outperform the market over this time period. So if you want to learn more about that and you want to jump into this trade with us, then be sure to scroll below so that we can learn more all about how I trade seasonal trends in the stock market and create massive profit opportunities for me and our readers. So that's all for my video today. If you like my video, or if you like the content, be sure to scroll below and give it a thumbs up, or click the bell if you want to get notified whenever I post a new video. So until next time, I'm Chad Shoup.